Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the corporate world. You know, the kind of places where money talks and numbers tell a story. Well, today we're going to see if Alchemy Investments Acquisition Corp 1 is telling us a very profitable tale, or if it's a bit of a cautionary one. So what's the big deal with this report? Well, it's essentially a check-in on Alchemy Investments Acquisition Corp 1, its financial health, and what's been happening with their money over the last few months. Think of it as their quarterly report card. Now, the first thing that jumps out is how they handle their Class A ordinary shares. These are basically shares that can be redeemed or bought back by the company. They classify these shares as temporary equity, not as a permanent part of the company's ownership structure. Why does that matter? It means they have to keep track of the redemption value very carefully and adjust it as needed, which can affect their overall financial picture. Let's look at the numbers around these redeemable shares. As of June 30, 2025, they had over 1 million of these shares. The redemption value for each share was around 11.4 cents. That's a lot of money that might leave the company. Now, let's dive into the balance sheet. This is like a snapshot of the company's assets, liabilities, and owner's equity at a specific point in time. As of June 30, 2025, Alchemy had total assets of about $12.5 million. Their liabilities were also significant, over $7.9 million. Everything else is basically the shareholders' deficit, which is a fancy way of saying the owner's stake in the company. Looking at their liabilities, we see accounts payable of $706,335 and accrued expenses of $7,550. There's also accrued expenses related party at $24472. These are the party $4472. These are the bill $100 and Torsi $72. These are the bills and costs the company has to pay. The big chunk of their liabilities is this promissory note with a related party for $1130,000. This means they borrowed money from someone connected to the company. It shows they are using borrowed funds, which isn't unusual, but it's definitely something to watch. Now let's talk about how the company performed financially. Over the 3 months ending June 30, 2025, they had a net loss of $27 for the $7 for ball, for $227 for $1. That's a pretty big swing. A large part of the income or loss is tied to gains or losses on their investments held in a trust account. In the 3 months ending June 30, $2,024, but in the same period of 2020-25, it was much higher at $1,591.44. This trust account is where they keep the money from their initial public offering, and its performance heavily influences their bottom line. Looking at the first 6 months of 2025, things are similar. They reported a net loss of $521,753. Compare that to the 6 months in 2020-24, when they had a net income of $2,727,557 Zawi dollars. This shows a trend of losses in 2025 compared to profits in 2024. The statement of cash flows tells us where the cash is coming from and going. For the first 6 months of 2025, they used $61.69 in operating activities. This is largely due to their net loss. They also received $60,000 from a promissory note related party. This is a financing activity, meaning they are getting money through borrowing or issuing stock. Now, here's where it gets really interesting. The company mentions substantial doubt about its ability to continue as a going concern. This is a big red flag. It means they might not have enough money to keep operating for the next year. They've had to extend their deadline to find a business to combine with several times, and they're relying on these extensions to stay afloat. To get these extensions, they had to put more money into the trust account. As of June 30, 2025, they had put in 2,020 scenes, and it shows they are really stretching to buy more time for their business combination. The company also wants us to know that it operates in a single segment. This means it's not heavily diversified, and its success hinges on this one main business objective, a business combination. And something significant happened after the reporting period. On August 22, 2025, they entered into a business combination agreement. This is huge. It means they found a company to merge with. The deal involves converting their shares and warrants into a new entity called Pubco. So what's my take on Alchemy Investments Acquisition Corp 1? Well, they are a special purpose acquisition company, or SPAC. Their whole purpose is to find another company and merge with it. So far, their operations are really limited to managing the money they raised and searching for a target. The big story here is that they finally found one, a company called Kartika LLC. However, the journey has been rocky. We see a shift from reporting income in 2024 to reporting losses in 2025. The company also acknowledges substantial doubt about its ability to continue as a going concern, meaning without a successful business combination, they might not make it. They've had to dip into their own funds to extend their operating deadline multiple times. The agreement to combine with Cartiga is a critical development. It means they might finally achieve their goal, but the success of this merger is still uncertain. We need to see how this plays out and if this new combined entity can actually generate profits and become a going concern. For now, it's a high-stakes situation for Alchemy Investments Acquisition Corp 1. Alright, that's a breakdown of Alchemy Investments Acquisition Corp 1's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.